Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Our first topic today is about the Bank of Canada, which is expected to hold its overnight interest rate steady at its current level of 2.75% as it wraps up its latest policy meeting on July 30th.
That's right, Steve. And it's important to note that this rate has been consistent for the last couple of meetings. Many economists believe that the Bank of Canada is likely to hold steady due to the recent uptick in inflation and a resilient labor market.
Exactly, Janine. Futures traders seem to agree, with only a 7% chance of a 25 basis point rate cut, according to LSEG data. The Canadian economy added an unexpected 83,000 jobs in June, which has helped to lower the unemployment rate for the first time since January.
And while the inflation rate did rise to 1.9% in June, it's still below the Bank of Canada's target of 2%. This suggests that inflation is relatively benign at the moment, which might be why the central bank feels comfortable holding rates steady.
Yes, but there's also the bigger picture to consider. The labor market, although showing some signs of recovery, remains weak with an unemployment rate of 6.9%. Plus, there's the ongoing trade tension with the United States, which could impact economic growth.
Trade tensions are definitely a concern. President Trump has threatened to impose a 35% tariff on Canadian imports starting August 1st. This adds pressure on both the federal government and the Bank of Canada as they navigate these uncertain waters.
That's true, Janine. Bank of Canada. Governor Tiff Macklem has indicated that he's less forward-looking than usual because of these trade issues. It seems like the central bank is in a bit of a holding pattern until there's more clarity on the trade front.
It'll be interesting to see how this plays out. While most economists expect the bank to hold rates steady now, the consensus is that we might see 2 more quarter-point rate cuts by the end of the year.
Our next topic is the concerning prediction that Canada is on course for a recession. A report from the Canadian Federation of Independent Business, or CFIB, suggests that both the second and third quarters of 2025 may see a contraction in the economy.
That is definitely worrying, Steve. The CFIB's report indicates that this potential downturn is being fueled by persistently low business confidence, largely due to ongoing trade tensions and a weakening manufacturing sector. It seems businesses are really feeling the pressure.
Right, Janine. The report forecasts a 0.8% decline in GDP for each of these quarters. Private investment is expected to take a significant hit, with projections showing a 13% drop in the second quarter, followed by another 6.9% decline in the third. Those are substantial numbers that could have far-reaching effects.
Simon Gaudreau, the chief economist of CFIB, pointed out that the ongoing trade situation is causing businesses to hesitate on investments, often pausing or even canceling them. It's a one step forward, one step back kind of situation, as he put it. This uncertainty is really impacting business decisions.
That hesitancy is also reflected in supply chain issues. Since March, an increasing number of firms, particularly in the wholesale and manufacturing sectors, have reported disruptions. It's a chain reaction that can stall economic momentum.
And it's not just businesses feeling the strain. According to recent surveys by the Bank of Canada, households are also pulling back on spending due to rising economic anxiety. There are growing fears of job losses, especially among young Canadians, which is causing consumers to change their spending behavior.
The Bank of Canada's survey of consumer expectations highlights this shift, with consumers becoming more cautious about their spending and pivoting toward Canadian-made goods and domestic travel. Meanwhile, the Business Outlook survey shows that many employers are pessimistic about sales and are planning to maintain current staffing levels while limiting spending to regular maintenance.
Despite the grim outlook, there is a silver lining. Stable inflation might give the Bank of Canada some room to maneuver. Inflation rose to 1.9% in June, and core inflation stayed near 3%. Plus, the unexpected gain of 83,000 jobs in June adds a layer of complexity to the situation.
Bank of Canada Governor Tiff Macklem has acknowledged that the long duration of these tariffs and the resulting uncertainty can weigh heavily on the economy. The central bank's key interest rate is currently at 2.75%, with the next rate announcement just around the corner on July 30th. Analysts are divided on whether the bank will hold steady or make further adjustments. Our next topic takes us to the Greater Toronto Area, where home prices have seen a significant decline. A report from Wahi, a real estate listing website, reveals that housing prices have dropped by $1 million in some neighborhoods since 2022.
That's a huge drop, Steve. For those who bought at the peak in early 2022, or even in 2023, it must be disheartening to see such a decline in value. It's especially tough for those who need to sell now and are facing losses.
Indeed, Janine. The report highlights several examples of homes selling at a substantial loss, such as a property in Oshawa that sold for a $510,000 loss, and another in Brampton that went for a $520,000 loss.
These stories are difficult to hear, especially for those families who might have stretched themselves financially to buy their dream home, only to find themselves in a challenging situation now.
While some real estate experts are predicting that home prices will increase soon, the market remains slow, particularly this spring. Wahi's analysis indicates that in 10 neighborhoods across the Greater Toronto Area, the median sale price of a single-family home has fallen by 40% over the past 3 years.
40%. That's a staggering number. It really shows how volatile the housing market can be and how important it is to stay informed and cautious with such significant investments.
The analysis by Wahi examined home price trends from April 2022 to April 2025, covering more than 300 neighborhoods across the Greater Toronto Area. The median price in 10 of these neighborhoods dropped by $1 million, according to data from the Toronto Regional Real Estate Board and Information Technology Systems Ontario.
It's clear that the market has been through a tumultuous time. I hope those affected can find some relief or support during these challenging times. Maybe we'll see a turnaround soon, as some experts suggest.
Our next story dives into a major development in the mortgage industry. Birch Hill Equity Partners and Brookfield Asset Management are set to acquire First National Financial Corporation in a significant $2.9 billion deal. This acquisition will take First National private through a newly formed entity called Regal Bidco Incorporated.
That's right, Steve. This agreement means that First National's founders, Stephen Smith and Moray Tawes, will retain minority stakes in the company. They'll hold an approximate 19% indirect ownership each, having agreed to sell about 2/3 of their respective shares. It's a fascinating move that suggests a new direction for the company.
Yes, Janine. The acquisition price is set at $48 per share in cash, which represents a 15% premium over the company's 30-day volume-weighted average and even surpasses its 52-week high. This is certainly a strategic move by Birch Hill and Brookfield, who bring a wealth of expertise in the Canadian financial services industry.
CEO Jason Ellis has expressed excitement about this new chapter for First National. He emphasized that the partnership with Birch Hill and Brookfield will provide significant opportunities for growth and innovation. It's clear that the leadership is optimistic about what this means for their customers, employees, and institutional partners.
The transaction is expected to close in the fourth quarter of 2025, pending necessary approvals from shareholders, courts, and regulators. It's notable that the agreement followed a thorough strategic review process, with multiple bids considered. BMO Capital Markets, acting as an independent valuator and advisor, deemed the $48 offer financially fair, which speaks to the thoroughness of the process.
And even though the company is transitioning into private ownership, it's reassuring for investors to know that First National's preferred shares will remain listed on the Toronto Stock Exchange. Regular dividends will continue until the transaction closes, maintaining some stability for stakeholders during this period of change.
Absolutely, Janine. Meanwhile, First National's unsecured notes will be redeemed at the time of closing, with holders receiving the applicable redemption price plus accrued interest. This kind of clarity is essential to maintaining trust and confidence among investors and market participants.
It's interesting to see how First National has evolved since going public in 2006. With over $155 billion in mortgages under administration, it stands as one of Canada's largest non-bank lenders. The relationships it has built with brokers are vital, and it'll be intriguing to see how the new ownership structure impacts these dynamics and future platform innovations.
Our final topic today delves into a significant regulatory move by the Financial Services Regulatory Authority of Ontario, or FSRA, which has revoked the mortgage brokerage license of Expert Financial Corporation. This decision comes after a thorough investigation into the company's activities, revealing some concerning practices.
That's right, Steve. The FSRA's investigation found that Expert Financial, along with its principal broker, Schumann Pandy, engaged in unlicensed mortgage activities. This resulted in substantial administrative penalties of $36,000 for the company and $32,000 for Pandy. It's a clear message from the FSRA about the importance of adhering to licensing regulations.
Indeed, Janine. The investigation also uncovered that Pandy had facilitated Nasir Syed Zaidi Hussain in operating as an unlicensed mortgage agent. Hussain was involved in client interactions and documentation processes without the necessary licensing. This is a serious issue as it undermines the integrity of the brokerage system.
Absolutely, Steve. It's crucial for consumers to have confidence that they're dealing with professionals who are properly licensed and meet all legal standards. Alyssa Sinha, the Director of Litigation and Enforcement at FSRA, emphasized their commitment to consumer protection, stating that they will act decisively against unlicensed activities.
And it's not just about maintaining licenses. The FSRA found that Pandy and Expert Financial failed to verify borrower identities adequately, which led to violations of record-keeping obligations. They also provided false and misleading information on the company's annual information returns. These breaches further highlight the need for strict compliance with regulations.
It's a reminder of how important it is to maintain transparency and accuracy in all dealings. Varinder Singh Virk, another individual involved, received a $2,000 penalty for dealing in mortgages outside of his registered brokerage. It shows that the FSRA is taking a comprehensive approach in addressing these issues.
These actions by the FSRA underscore the necessity for brokers and agents to operate within the bounds of the law. Settlements were reached with Expert Financial, Pandy, and Virk, reflecting the seriousness of the situation. It's crucial for the industry to uphold high standards to maintain consumer trust and market stability.
I hope this action by the FSRA serves as a wake-up call for others in the industry to ensure they're fully compliant with all regulations. It's not just about avoiding penalties, but also about protecting the consumers who rely on these services for major life decisions like purchasing a home.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.